welcome, and where the heck are we in this market cycle? That's the question I'm asked more frequently than anything. How's the market? Where are we in the cycle? What inning are we in? So I'm going to try to address that today, and basically the snapshot overview is that volumes are falling, both dollar volume and number of properties sold, but values are still increasing. This is symptomatic of a market that is in transition mode. I believe that we are probably 13 or 14 months into a market correction, and that market correction started late September, early October of last year when we started to see significant stresses in the land market, particularly in Manhattan. There was about a 3 or 4 week period during which land values dropped by 20 to 25%. And you won't see that in any statistical analysis, simply because the sellers who were getting bids at 20 to 25% below what their expectation was didn't transact. Now, what we've seen, we're going to go through the land market, we're going to go through where we are in the broader New York City market, and then look at each of the sub-markets, drilling down very granularly into Manhattan, and then we'll do a quick overview of the other boroughs. But I think what we're seeing is that when a market is transitioning and there is downward pressure exerted on property values, what happens is those values still start to go up because the only folks who are actually selling their properties are the ones who are getting their pricing. And so you see volumes drop, values keep going up, and this is very quintessentially what happens when a market is in transition or correction mode. So if we look at what's happening so far in 2016, we see that the dollar volume of sales, if we annualize, and all the statistics I'm going to talk about today are annualizing the first 3 quarters of the year and comparing them to past years. You see the dollar volume is on pace for $59.2 billion. That's about 26%, 23% below last year's all-time record of $77.1 billion. And, you know, everything with these numbers is relative. If yesterday it was 10 and today it's 8, you kind of feel like it's bad. It's important to consider that even if we hit the $59.2 billion, that still will be the 3rd best year we've ever seen in the market. So the absolute number is not so bad, but compared to last year, we're feeling like there's a drag, a 23% reduction. And if we look at the number of properties sold, we see that we're on pace to be down about 11%. That's also down about 20% from the peak, which was also an all-time record in 2014, 5,534 properties sold. That was an all-time record by more than 10%. So if we put this into relative perspective, we see that 2014 and 2015 were the 2 best years for building sales that I've seen in the 33 years I've been brokering in the city. I mean, just really incredible years. So coming into this year, we figured there was going to be a pullback. You have to have a regression towards the mean. You have to move towards long-term averages. You know, what we're seeing is just that. We're seeing a reduction in volume, but values are staying very, very sticky. If we look at price per square foot, you see the average so far this year is $540 citywide. That's an all-time record, and that's a 10% increase over last year. But there are 2 sales, and what we try to do with these statistics is cull out the outliers that may skew the numbers very much. So in the overall average of $540 a foot, there are 2 transactions that occurred on Spring Street in Soho, one at over $17,000 a foot and one at $25,000 a foot. If we simply remove those 2 transactions from the data, we see the appreciation rate citywide falls to 7%, still not a bad number. If we look at cap rates, we see that we still are experiencing cap rate compression so far this year, but if you look at that curve, the trend line is becoming very convex, which means that cap rates are plateauing, means values are plateauing. They're still rising, but they are plateauing. If we look at the land market, which is probably the most interesting market to look at to try to give an indication of what's happening market-wide, and we look at land because land and hotels are always the first 2 product types to shift when a market is in transition. Land changes because it's indicative of what investors and developers believe the market's going to be like 3 or 4 years from today, when the properties they're developing are going to be delivered to the marketplace. And hotels are very highly reactive to changes in the market because leases in hotels are only for 1 day. So we look at those two product types as an indicator of what's happening in the market. If we look at development so far this year, we see number of transactions down 25% citywide, dollar volumes down 55%, and the average value per buildable square foot at $240 is down 16% so far this year.